So to continue on that stream, even more exciting, next up we have ABS. Is China going too far and too fast on asset-backed securitization? We will have Mr. Chen Ke, Dr. Chen Ke, who joined Pengyuan International as Senior Director, Structured Finance. He is primarily responsible for the rating of structured finance transactions. Prior to joining Pengyuan, Dr. Ke Chen worked as a lead quantitative analyst at the S&P Global Ratings. He joined S&P New York office in 2011 and internally transferred back to the Hong Kong office and built S&P's APAC quantitative modeling team. He has been involved in a broad range of structured finance deals, including CDO, ABS, RMBS, future flow securitization, and non-traditional securitization. Let's give a round of applause to Dr. Chen.
Good morning, everyone. I'm Chen. At Pengyuan International, I will be responsible for the structured finance rating. So in terms of today's agenda, I'm going to start off by introducing the market structure and the development of China's ABS market, and I will talk about the driving forces behind the recent dramatic development. After that, I will talk about the opportunities and challenges faced by this industry. I will use the marketplace lending securitization and the non-performing loan securitization as the two examples to illustrate the risk in the market. Then I will move into the Q&A section to address topics that are of most interest to the audience. So this table showing securitization regimes in China. As we can see from this table, China's securitization market actually is regulation segmented market. So there are four regimes in China's ABS market, which are supervised by different regulators and targeting different investors. So these four regimes are credited asset securitization schemes, or CASs, asset-backed specific plan, ABSP, and asset-backed notes, ABN, and insurance ABS. So there are three markets in China which can trade in ABS. The interbank bond market, which is for CAS and ABSP, the ABN, the exchanges for ABSP, and Shanghai Insurance Exchanges for insurance ABS. Both domestic retail and institutional investor can buy ABS in China. For foreign institutional investor, they can buy ABS through the Bond Connect or by the QFII or RQFII program. So according to this chart, we can see that China's ABS market development was very slow until the explosion in 2014, after several favorable policies were issued. So the development was further spurred by the change of the offering systems from the approval system to registration systems. So in 2017, the issue value has increased to 1.5 billion, which makes the China second largest securitization market in the world. So the initiation and the development of the Chinese securitization market was driven by the government policies, but the recent expansion has shown that the market forces has played a more important role in driving the market development. So on supply side, the banks have the incentives to convert illiquidity assets into the marketable securities and transfer their loans off their balance sheet to release capital. For corporate, they have incentives to diversify their funding sources and lower their funding costs. On demand side, this development is actually fueled by the development of China's household high saving ratios and the increased demand of the liquid and safe asset from the asset management industry. So the market divided both in size and in the asset class range. So for the transaction issued under CAS programs, so RMBS is the largest asset classes. It used to be the CRO, but the CRO is the third largest asset class in this scheme due to the improved liquidity condition for the banking sectors. But for the ABS schemes, the significant growth was largely driven by the increase of consumer loan ABS issuance. Alibaba and Ant Financial together originate about 150 billion yuan ABS. So in terms of outlook, so we expect the growth of China's ABS market will be continue, but at a moderate pace. So due to the new policies on regulating the origination for consumer loans, we expect the consumer loan ABS cannot keep the previous pace, of the previous year. But we expect other consumption-related ABS will continue to grow. For example, the auto loan ABS and the RMBS. And we also expect the CMBS and asset backed by account receivables will continue to increase due to the favorable policies and funding demand from the China's property developers and SMEs. And for the issues under the updated ABS schemes, since the introduction of the special purpose trust structure makes the ABS schemes comparable to the ABSP schemes in terms of the underlying asset and bankruptcy remoteness protection. So far, it seems very promising for the ABS market in China. But this explosive development is also facing significant challenges. Here is the list of the challenges facing by China's ABS market. So first is the misaligned incentives among the participants in the securitization process. The second one is the asymmetry information and the lack of transparency regarding to the underlying assets. Due to the short history of China's securitization market, it does not have sufficient data for the model to analyze the risks. And for consumer loan ABS, most of the loans actually originated in the past few years. So this limited underwriting history make it very difficult for institutional investors and rating agencies to actually assess the risks and model the prepayment and loss assumptions. The finally one is that the performance is actually having to be tested by a stressed credit environment. So in the next few slides, I will use marketplace lending securitization and NPL securitization as two examples to illustrate all of these risks and try to shed some light on the solutions. Marketplace lending refers to the non-bank lending by the online companies, make loan to the retail consumers and SMEs using some innovative financial technology. So the marketplace lending sector has been grows very quick due to the rapid growth of the e-commerce in China. So as we can see from this table, it has grown pretty quickly. That's the consumer loan ABS. So most of the consumer loan ABS are actually issued by Ant Financial and Jingdong Finance. So marketplace lender, they cannot take deposit like banks. So they have to rely on the market-based funding mechanism. At the very beginning, they will just fund by issue the equity to the venture capitalism, or just sell the originated loan to institutional investors as a whole loans. But with the cumulative lending value, so the marketplace lender has turned to the alternative source of the funding like securitization. So when marketplace lenders, they transfer the loans off their balance sheet through securitization, they usually do not hold the loan they make, and they generate revenue through the origination fee or the servicing fee. So this one is actually an originate and distributed model, which was widely viewed as a root cause for the subprime loan crisis in the U.S. So this problem could be even serious in the marketplace lending industry, because a lot of marketplace lenders, they actually adopt growth at all costs mindset to achieve high growth rates and valuation. So securitization of such problematic loans can motivate greater origination for the same type of loans. And as we discussed before, most of the originators, they only have a very limited underwriting history, and we haven't seen the performance through a full credit cycle. So for this asymmetry, for this misalignments in incentives problem, there are some solution has been proposed after the financial crisis. So one of them is the credit risk retention. That requires the originators actually return some credit risk by holding some portion of the securities they issue to the investors. But the credit risk retention mechanism is not mandatory. The requirement is not mandatory in the ABSP schemes, which is most market lenders actually issue the ABS in China's market. So another solution has been proposed is covered bond, which is alternative structured finance instruments. They have the due cost to both the issuers and ring-fence the underlying assets. So another example is the NPL securitization. So securitization has been promoted as a solution to China's banking sector's NPL problem. So there's a pilot NPL securitization programs has been launched in 2016 with a total quota of 100 billion yuan in 2 years. So although it has been promoted by the government, but the total issuance for the past 2 years is 28.6 billion, which is much less than the quota of 100 billion and the outstanding NPLs in the banking sectors. So one of the possible explanation for this underdevelopment of NPL securitization market is that it could be held by the asymmetric information problem. So since it is very difficult to estimate the NPL's recovery timing and the recovery amounts, that create a huge asymmetric information problem between the issuer and the investors. So to address this asymmetric information problem, most of the deals actually issued in China, they use a very simple deal structure with only 2 tranches. And also they issue the NPL deals with a huge discount. But as we can see from this table, all of these outstanding NPLs they are issued with a steep discount. But according to the issuance volume, we can see this mechanism is not very efficient because the investors are still reluctant to participate in the market, and the issuer has lost their incentive to issue the NPLs because the steep pricing discount. So this one is actually a typical labor market problem of the asymmetric information. So the asymmetric information of the underlying asset value will cause an adverse selection problem, which will in turn lead to the price distortion and the underdevelopment of NPL securitizations. So usually the solution for the labor market problem is that the guarantee, branding, and the licensing. So in the context of NPL securitization, the guarantee is actually, for example, the public-supported securitization schemes adopted by the EU government is kind of a guarantee. And the branding name can be reached by the repeated issuance of the issuer. And I want to emphasize here, so the credit ratings from the independent rating agency is actually a licensing mechanism. So usually credit ratings from an independent rating agency can resolve this asymmetric information and try to align the incentives between investors and originators, and try to provide more information about the underlying assets. And also the ratings is very useful for other mechanisms such as the guarantee. For example, the Italian government guarantee program requires the guarantee tranche has to have the investment grade ratings. So here's our approach to address the NPL securitization problem, and try to use our model, data, and analytics to resolve the asymmetric information issues between the investors and the originators. So when we assign ratings for NPL securitizations, we will assess both the quantitative and qualitative factors. So for the quantitative side, we will estimate the recovery rate using our proprietary recovery forecasting models, and we will use a Monte Carlo simulation to generate a portfolio recovery amount. So this recovery amount will enter into our cash flow models, and we will see whether this structure can sustain with different stress scenarios. And we will also consider different qualitative risk factors like operational risk, legal risk, and counterparty risk. So in general, we try to take advantage of our data, models, and knowledge to resolve this asymmetric information. As we mentioned before, the data we have a unique advantage about China's financial data. We use the corporate finance data and the non-performing loan recovery data and the ABS performing data in this context. And for the models, we actually can take advantage of our quantitative skills and computational power from ourselves and our parent companies. All of this model actually developed in Pengyuan use global standards and calibrated with China's local data. So here's some concluding thoughts. So China's securitization market has grown quickly in the past several years. The development of securitization market actually help to alleviate the financial constraints and facilitate the risk transfers. So for the corporates, they actually have a direct financing channel and reduce their borrowing costs. For the financial institutes, securitization actually improve their risk management practice and diversify their funding resource. Although the securitization offer a lot of benefits to the economy, but it also grows with a lot of risk inherited to the securitization process itself or specific to China. So without resolving all of this risk, after a while, the risk accumulated in the securitization market may cause some challenge to the stability of the financial systems. As we can see from global financial crisis, so market itself is not able to address these fractions. So government and regulators should play a more active role to actually align the incentives between different participants in the securitization process and try to improve the information disclosure as an integral part of this securitization market. Rating agencies should improve their information quality in their ratings and try to fill the gaps of the information between issuer and the investor, including international investors. Thank you.
Thanks for that, Dr. Chen. I do wonder sometimes, certainly I have written articles now and then about the restarting of the ABS market and the opportunities that are there for investors offshore through QV, RQV, now maybe through Bond Connect. Can I just have a quick show of hands? How many people actually have invested in ABS in China? 3. Interesting. Well, if you haven't started yet, I don't know exactly what the issues are. Question for you, Dr. Chen. What can Pengyuan do for the other uncertain investor that might be interested in this area?
Okay, so for structured finance ratings, I think data and analytics are our core advantages. So as we have discussed in our previous presentation, our group has a very unique advantage in financial data in China. As for the analytics, we have a very strong analytical team. Most of our team members either have a PhD or master in quantitative fields. So since for structured finance deals, I think the quantitative skills and method models are quite important in assessing the underlying risk of these deals. So I think quantitative modeling and analysis is definitely an advantage for us.
Thanks for that, Dr. Chen.